That PEA suggested the project has a net present value on an after-tax basis of in excess of 1.7 billion US dollars. And our current market capitalization is only around 100 million, 110 million US or so. So we certainly see that there's a potential kind of value play here to looking at a company like FPX.
When it comes to mining stocks, precious metals, and cryptos, you need to go to Mining Stock Wealth. And welcome, this is Kerry Lutz, and you are watching Mining Stock Wealth. You know, we're working with a lot of different companies in the junior sector, resource sector, to bring you values, to bring you opportunities that you otherwise might not be aware of, and that might be worthy of some of your hard-won investment dollars. And this company we're going to be talking about is a play on electric vehicles. It's an underinvestment play. You may not be aware, but so many of our base metals for the past 2 decades have been underinvested. And there's a lot of reasons for that. Martin Turin is going to get into it. His company, FPX Nickel. You find him at FPX Nickel. That's NICKEL. For those of you who are bad spellers like myself, .com, traded on the OTC, FPOCF, and of course on the TSX Venture under FPX. Martin, it is great to have you on here. And I've been looking forward to this interview because nickel is kind of one of those metals. It's vital for so many different things in society, but especially now the upcoming planned expansion of electrification of the world's energy, particularly we're talking about electric vehicles, and we're talking about batteries. And perhaps you might not know out there, but batteries in terms of storing alternative energy are becoming more and more important, underplayed. It was Elon Musk's pipe dream of not too long ago, but now it's becoming a reality. So with that introduction, Martin, we're really thrilled to have you on. I mean, nickel is like copper has just been on fire lately.
Yeah, it has. Thanks for having me on, Kerry. It's good to see you. Really since the market lows of last March and April, when the onset of the COVID pandemic, we've seen, the nickel price recover remarkably. It's up over, 100% since those lows, and it's currently trading at about $8.80 a pound US. Which is a strong price, but it's relatively in keeping with the long-term historical average nickel price. And that's been driven, I think, to date by a very strong recovery in the Chinese economy, who, as we know, are kind of the main consumers of base metals. The Chinese economy is, and I think what people are seeing is as the rest of the world starts to recover from the pandemic here, hopefully sooner rather than later, in terms of economic and GDP growth. The money printing that's happening, the commitment for infrastructure spending that we're seeing in various jurisdictions around the world, and the just general economic recovery could potentially lead to significant impact positively for demand of base metals, and nickel is one of the major base metals, so could see some price appreciation on the back of that.
Hey, and we're also seeing, like you said, especially the money printing, that's got to be a major factor in driving not just precious metals prices, but base metals for sure. And FPX is really uniquely situated to take advantage of this, isn't it?
Yeah, it is. We're, one of the things that is, I think, as people will start to maybe do some research into the nickel space, one of the things they'll probably realize quite quickly is there are very few publicly traded nickel companies in North America on any of the U.S. exchanges or the Canadian exchanges. Nickel-focused companies that offer investors exposure to the commodity. There's probably about maybe a dozen or so in North America as publicly traded, and so within that relatively narrow landscape of available sort of options for public equity investment in nickel, we certainly think we're one of the best options for people to look at. We have a very, very large nickel deposit in British Columbia, also on the west coast of Canada. In fact, it's one of the largest nickel deposits in the world. The deposit is called Baptiste, and we recently put out a preliminary economic assessment that projects what the project ultimate value would be. And that PEA suggested the project has a net present value on an after-tax basis of in excess of 1.7 billion US dollars. And our current market capitalization is only around 100 million, 110 million US or so. So we certainly see that there's a potential kind of value play here to looking at a company like FPX.
Your PEA, was calculated on $7.75 per pound nickel, and now it's up over $1. So that's got to really make those numbers look even better.
Yeah, the nickel price, as you mentioned, it is trading over $8.80 US a pound right now. So if you look at the kind of the sensitivity analysis in that PEA, that would yield a net present value for the project closer to 2.3 to 2.4 billion US versus the 1.7 billion. So certainly there's a lot of leverage inherent in our project to an increase in the nickel price going forward.
And what does that do to the IRR? It's got to be, I think it's at 22% now, so it's got to bring it up probably into the 30s, huh?
Actually, the base case, the IRR was in the 18 to 19% range. And at today's nickel price, it would be in around the 22% range or so.
22. Okay. Numbers. All right. And then as if that isn't your only potential resource, then you've got the Van target, which kind of really makes the Baptiste, well, I don't want to say it makes it look small, but it's less significant, put it that way, compared to the Van target.
Yeah, so we control 100% of a very large land package in central British Columbia. It covers about 250 square kilometers, so very, very, very large. And so Baptiste, the main deposit that we were just speaking about there, for which we've done the preliminary economic assessment, Baptiste represents only 1% of that overall landmass. Okay, so within the rest of that 99% of the landmass, which is almost completely unexplored, we've identified a very large target called the Van target, which is actually has a larger sort of target footprint based on surface samples of rock, of outcropping bedrock, again at surface. And so that target is larger than what we've already defined at Baptiste, which suggests that could potentially host a deposit that is larger than Baptiste, which again, as I mentioned, is one of the largest nickel deposits in the world. So we're going to be doing a maiden or an initial drill campaign at that Van target. It's never been drilled before. So we will be putting the first holes in it this coming summer in North America, here in North American summer. And we see the potential here to delineate, possibly another world-class nickel deposit within the same land package.
And now we're really talking a district as opposed to just one project. And you've got other significant targets out there as well.
That's correct. Yeah. So it definitely is a district scale play. Baptiste, the main deposit, would support a 35-year mine life. So it in and of itself, it is a multi-generational asset. The Van target could add additional decades or generations onto that. And we've got at least two other targets, the SID target and the B target, which we think could add, again, decades on. So, the main sort of nickel mining district in Canada is Sudbury in Ontario. And, that's this sort of world-renowned large nickel producer for multiple decades. We think that our project could host a mineral endowment that really competes with Sudbury ultimately and becomes the sort of the West Coast Canadian answer to Sudbury over the longer term.
Interesting, and there's a lot there to still be uncovered for sure. Hey, one thing I wanted to address with you on the demand side. So obviously we're moving towards electrification. I guess the main use for nickel, stainless steel, that's probably a slightly growing market globally, but really it's EVs and electrification we're talking about here. Elon Musk recently announced his desire, for lack of a better term, to substitute cobalt with more nickel. But one of his provisos pretty much was that there would have to be an assured supply of it. And I guess indirectly, at least, you could be figuring into Elon Musk's plans to rebalance the metallic content or the metallurgic content of the existing batteries that go into EVs, particularly Teslas, since they're the largest producer.
Yeah, absolutely. So a lot to unpack there in that. That's a great question. I would differ a little bit just on quickly on stainless steel. So stainless steel has been growing at 5% per annum in demand over the last several years. So basically, as the developing countries of the world, their economies grow, they actually have a high rate of stainless steel adoption to get up to the same levels of stainless steel consumption per capita as countries like the United States and Canada enjoy. So stainless has been very strong and will continue to be very strong. On EVs, yeah, there's been this trend to increase the amount of nickel in batteries. And car makers like Tesla and other battery makers have been trying to increase the amount of nickel and decrease the amount of cobalt in the batteries. That's because the more nickel is in the battery, the longer the range the battery will have, and the more quickly it will recharge. So there's a real motivation among the automakers to get more nickel into the batteries. When Elon Musk made a call for more nickel from the mining industry last summer during the Tesla earnings call, he specifically said he wanted more nickel, but he wanted more clean nickel. Okay, Tesla is a play, certainly from a consumer standpoint, on kind of a low carbon future. And I think the people who buy Teslas, by and large, are doing so, at least in part. Maybe there's a status aspect to it, but you have to imagine that some of them want to lower their carbon emissions from their mobile transport. Well, it's important that all of the metals then that go into an EV battery, which is a considerable amount of metal, including nickel, should come from clean sources. And that's why he made that call for clean nickel. And certainly in that regard, we think we're in a very good position to produce a significant amount of nickel. So, Baptiste, our project, could be one of the 10 largest nickel producers in terms of annual production. So it would service a lot of the needs of that industry. And also, we have done some recent studies that we've disclosed in the market that show that our product would have a very low carbon footprint associated with it. So it would be a very clean source of nickel that would also kind of meet those automakers' desires.
Right. And that's largely in part because your grade product that you'll be producing doesn't require smelting. Do I have that right?
That's correct. The nickel product that we would produce, unlike most nickel products out there that are produced by miners, doesn't have to go to a smelting stage. That's due to the unique geology at our deposit. The mineralogy within the host rock is very low in what are called deleterious or penalty elements. These are things like sulfur, arsenic, antimony, mercury, selenium, etc. The absence of those elements in our host rock means the product that we produce is very clean, and so it can bypass that smelting stage. And smelting is, of course, designed to sort of clean up and get rid of those nasty elements. Because we don't have those nasty elements, we can sell our product directly to stainless steel producers or to battery makers, and therefore have lower kind of carbon emissions associated with producing our nickel, and also get paid a lot more because we're cutting out that smelter middleman and yielding a much higher proportion of revenue than what a typical nickel miner would.
And then you got transport costs to the smelter that you avoid a lot of associated costs with it. And generally, there's only one smelter in an area. There's not like there's a bunch of smelters competing for your business. So you pay a premium on that. So you save really substantial costs to, between producing your product and getting it to the end user, which all really explains that higher IRR and better profitability than a lot of your peers out there.
Yeah, totally. That's where, in evaluating mining projects, you have to look at like what the grade of the ore body is. But you also have to look at things like the metallurgy, how easy or difficult is it to extract the metal from the ore. That's where we have, great metallurgical simplicity with our deposit. And then you also have to understand the end market, right? We're not selling gold doré or gold bars, which is very easy to wrap your head around. In the base metal space, you're selling these concentrates and these intermediate products. And there are a lot of vagaries and specifics around what different types of products yield from consumers. And having a clean product in our case is a key differentiator for sure.
Yeah, it's a little bit of inside baseball, but I think it's really required that you understand it to understand the value behind FPX. And again, the website fpxnickel.com. We'll mention the tickers again a little later. One thing, your background. You're a CPA, as we call you here in the States, an accountant, and you've been a real steward of the company. You haven't been Basically diluting the company. You're just issuing to keep the company going. Your burn rate extremely low, isn't it?
Yeah, it is. I mean, that's something we do pride ourselves on. It seems like it may perhaps a strange thing to pride on yourself on being frugal, but we think it's important as stewards of capital for shareholders' money. And that shows. I think in the peer group, we've tended to spend just a fraction of what other companies in our peer group have spent on general and administrative costs over the last several years, and that allows us to really, again, as you say, really sort of keep the share count as low as possible. And ultimately, that speaks just to our alignment. So management owns over 20% of FPX. So between myself, the other officers and directors of the company, we own over 20% of the company. So our ultimate sort of financial benefit from this company is not the salaries that we earn. It's going to come from the capital appreciation of our investment. So I think we're very much aligned with shareholders in that regard.
In the ideal world, these companies are waking up now, big producers of base metals, and saying, we need more nickel. Where are we going to get it? And probably one of the first places they're going to look is FPX, right?
Well, we certainly know that we have the scale to be of interest to them. So if you're a major company, there's a few things that you need. First of all, you need to be making money in your existing business before you think about growth, right? And these diversified major companies are making a lot of money in their nickel business, their copper business, their iron ore business, their zinc business. They are printing, the BHPs of the world are printing insane amounts of profits every quarter. And then beyond that, when those companies of that major scale look for assets, there's a few things they're looking for, right? The first is they want scale. They want something that's going to be big. So sitting on a deposit that could be one of the 10 largest in the world, we know we check that box. They want to be low cost. Again, our operating costs in the PEA are projected to be at US $2.74 per pound of nickel. So that would be within the bottom quartile, the lowest quartile of the cost curve for the nickel business. So it's going to be big, low cost. And thirdly, it's in a stable jurisdiction in central British Columbia. The fourth element that I think is starting to factor more and more into decisions that are made by these diversified companies is what is the environmental profile of the asset. And again, that's where having this low carbon footprint we think is a key differentiator for our asset. So the last generation of nickel mines built by the majors were between 2010 to 2012. So it's been almost 10 years since they invested in the next generation of nickel mines. And we certainly foresee going forward that, having one of those groups as an exit partner for our shareholders is certainly a potential.
And that's an interesting thing that we see in base metals, highly cyclical. The money starts to flow. They're always playing catch up. Then there'll be some type of economic slowdown, whatever, and they can catch up. And then again, like you said, you have growing markets, growing, developing economies, all these things. And now they're at catch up again. Like we know, the majors are not explorers anymore. They're really into developing and producing. So they're going to have to go out there at some point, aren't they?
They are, absolutely. I mean, we all know that when, commodity prices go down, metal prices go down, the first divisions, the first, department budgets that get slashed are the exploration departments. And so that means that the 2010 to 2019, the teens as a decade, were a lost decade as far as exploration for most metals. And I would say particularly for nickel, even more so than for things like gold, copper, et cetera. And so the last major nickel discovery, that there was only one major nickel discovery that was made between 2010 and 2019 is called Nova Bollinger in Australia. And it got sold a few years ago for close to, I think it was about $1.5 billion US. Okay, so major nickel discoveries tend to come along only once a decade or so. And the last one before that was Voisey's Bay back in the 90s, which is a multi-billion-dollar exit. Nickel deposits, high margin nickel deposits at the scale that what we have do not grow on trees in particular, because again, there's been no incentive to explore for nickel during that lost decade.
Yeah, and that's the problem that we saw in so many of the base metals, that there's a lost decade and arguably a lost 20 years, because really the investment, the sector has been underinvested for decades now, really going back further than that. But the large discoveries have helped kind of hide that lack of investment, right?
Yeah, but what we've seen in nickel is that the market, after being in oversupply for about 5 years, from 2010 to 2015, from 2016 to 2019, the market turned and was undersupplied for 4 years in a row. And that would have continued in all likelihood in 2020, but we had the pandemic set in, and that resulted in a hit to demand. However, we're going to be returning, to deficits in all likelihood in the nickel market this year and in coming years. So we're in a period. We're really in the midst of a period of long-term structural shortfall in nickel supply, and that's only going to be exacerbated by the growth of EVs. Listen, EVs effectively didn't exist 5 years ago as a source of demand for these metals. This is a brand new source of demand, and so that those many years of underinvestment in new supply capacity is just going to be hugely exacerbated by this new source of demand that again didn't exist a few years ago.
It's such an interesting phenomena, the EV phenomena, because on the one hand, the actual finished manufacturing, assembling of the product, including the batteries, requires far less employees. But then it's this huge drain on resources that's going to require expansions of various base metal operations that's going to add to employment. So I just think it's an interesting phenomenon that we're seeing, where we're really going to have to go back to the basics, and that means base metal production, exploration, discovery, and really rebuilding these industries from somewhat neglect, I guess. And I guess that's where FPX comes in. So go over to fpxnickel.com. Make sure you sign up for notifications. Again, the ticker symbols on the OTC, FPOCF, and on the TSX Venture, FPX. Martin, been a pleasure, and thanks for giving me some knowledge on the subject. And I think there's an amazing opportunity out here that you really want to take a look at. So we wish you the best, and we'll talk to you again real soon.
Thanks, Kerry. Take care.
Mining Stock Wealth.